Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Friday morning pre-market webcast. Well, yesterday's webcast was entitled "If the Bears Had an Opportunity," right? They took their opportunity, and they did what the Bears usually do with their opportunity, which is just blow it. I mean, and with the usual consequences, the usual results, the usual, just disaster that ensues, right? Um, Everybody was leaning short yesterday morning. I was leaning short yesterday morning. We got involved in a short with a half entry at daily pivot and a half entry at the 200, and the open hit and it ripped through, busted our risk marker, and that was all she wrote. So we did a long. I didn't long it. I let it go. I waited for it to come all the way back to our proprietary level. So yesterday was a real exercise in patience for us. Here's a 5-minute chart. So here's the open. And, once it did this little dip here, and that was it. Came up, did a bias. This orange line is my proprietary level. Came back, kissed the proprietary level, and did what we call a bias retest, and we were able to get into a nice long there. But and then we got in a decent short on the way back. But yesterday was a function of just the Bears being the Bears. Just when you think the Bears can't be the Bears anymore, they're back. We spent almost 2 months underneath the 200-day exponential moving average. We're not underneath it anymore. We are 40 handles above. And I know a lot of people are coming in today expecting some kind of a dramatic reversal. I don't really have good tidings for you. I think what is more likely today is that we chop, maybe do a little bit of a retrace, but we've already seen follow through. If we see much more follow through, I would, I doubt it. But the reality is, when I start seeing my charts. Here, I'll do it right here on the air. When I see my charts start jumping up into older areas, and I have to start removing like old places where I do the 50-day exponential moving average, it tends to keep going a little bit longer than people would like it to go. So, we had a 2024 risk marker on that short yesterday, and we always talk about using disaster stops. And if there was ever a day for a disaster stop, yesterday was the day. You have to live to trade another day. So I've got 65 half above, then I got 72. Then you get into R2 up there, R1 and R2. On the downside, 53 half, 46, 43. So, I mean, there are some levels around, but we've pretty much blown through the majority of them. So, I mean, basically what I'm here to tell you guys is to be careful. Don't assume we're going to have a massive reversal because we are oh so overbought. We are. I mean, that we are 73 handles above the 45-day pivot, but I would just urge, make the Bears show you something at least, okay, before you dive in and just start shorting, okay? They just did 10 right in their face off the Europe Open. So unless this market starts to build lower highs consistently, it's going to be very difficult to find any risk to latch onto. And when you can't latch on to risk like that, that's what gets the Bears into all these squeezes all the time. So just be careful. It's Friday. Just be careful. Okay. Everybody have a great night. Have a great weekend. Follow us on Twitter at Princeton Trader. Check out the website. Check out the chat room. I'll be back Monday morning with another webcast. Trade them well, everybody.